Also, what's notable here is roughly 1 in 35 mortgage holders are missing a payment, Rebecca.
Even though interest rates are going down, a new report shows many people are drowning in debt.
More Canadians are drowning in debt and tapping into their credit cards and lines of credit. This is not a good sign at all because it's usually a sign of the end of the road. So last week, a report came out from Equifax, more Canadians missing non-mortgage debt payments. And we're just going to get into some of the stories of this as well, because the average debt levels, excluding mortgages, are getting completely insane, continue to rise at a pace that cannot be sustained anymore. That is for sure.
You okay?
No.
Equifax Canada says the number of consumers missing a non-mortgage debt payment in the third quarter rose compared with a year ago. The company says the 90-day non-mortgage balance delinquency rate was at 1.63%, up 14% compared with the third quarter last year. But here's the thing, that sounds really low, and you can make that a really rosy statistic by saying, oh, that's really low, doesn't really matter that much. But when you're talking about 2.62 trillion of consumer debt, that is actually over $41 billion, more than the entire credit loss provisions of Canadian banks combined, that people are defaulting on those loans right now in 2025. Just think about that.
How much money is in that casino?
And like I said, this is always a much higher rate than obviously the mortgage debt as well, which is a lower rate. So the increase came as overall consumer debt totaled $2.62 trillion, which is a 3.4% increase compared with a year ago. So it's rising quicker than the CPI, but we know the CPI is bullshit anyway, so we know that it's obviously going to be more than that. But average non-mortgage debt per consumer in the third quarter was over $22,320, which is up $511 from a year ago. And you'll see that in the story that we're about to get into, how you might think, oh man, this sounds like a lot of debt, but really it's not a lot of debt when you put it into the context of the average. Just think about that. Every single person in Canada has an average of over $22,000 of debt.
I just got the car.
And then Rebecca Oakes, vice president at Equifax, said there were tentative signs of stabilization earlier this year. We remember that. Obviously, I was playing the clips from back then, but she's flipped on that now.
But when you start to think about your mortgage renewal, that is still creating payment shocks. We are still seeing those missed payment levels rising, not only on the mortgage itself, but really across the other types of debt.
And she says the third quarter data indicated some renewed stress, especially in younger households and homeowners in urban centers. So you're beginning to see homeowners are starting to crack, and it could be a reason why they're tapping their home equity lines of credit. And obviously, that is never a good sign.
And then that happens.
But it's a sign of the times of what is happening right now. So I want to get into these stories because this is just the normal thing now in Canada, especially considering that report with Equifax. The average couple in Canada is over $40,000 in debt. Absolutely mind-boggling, isn't it? What do I do? Drowning in debt, says this post on Reddit. I lost my job, currently doing skip the dishes to make ends meet. I only make $1,600 a month. Applied for all these benefits and whatnot, but the crux of the matter is I have $25,000 in credit card debt over 7 accounts, which is only just above the average. My girlfriend has $40,000 in debt over 3 accounts. My minimum payments are $500 per month. I'm not sure what hers are. Many of these people are not going to be paying back this debt. They're just making the minimum payments until they can't make those anymore, and then they're going to default on it.
Not paying this back.
And you're already seeing over $46 billion worth of defaulted loans right now, which is just on the credit cards, the line of credits, all the consumer debt. That's not including the mortgage debt. And obviously that is showing you how the financial system can be extremely shaken very fast, because whilst you might say that's a low number compared to 2008 in the US, what is a massive number is the leverage ratio ratios at Canadian banks being over 400, 500, 600% in some cases. So they're extremely leveraged. They're not keeping much cash on hand and they're paying out those dividends. So that means that basically if there's a massive cost all of a sudden that they have to deal with, they don't have the cash and they're taking that from future earnings, and then their stock can tank and it can go into this vicious circle. So it's very interesting what's going on, and you're seeing the similar sort of situations that the US had right before the financial crisis in 2008. And then this is just another story of the Canadian depression here. Social mobility is gone. Inflation is rising way faster than the government's figures. One unexpected bill can set you back months, so take a listen. Feels like no matter how hard I try, I'm stuck in place. I'm sure many people can relate to that, and it's just a sad situation for a lot of these people. Last month, my rent went up again. Many people can relate to that, especially over the past couple of years. What used to cost me $60 a week is now pushing $100, even though I'm cutting corners. And that goes into many of the comments that I saw on last week's videos, and please leave a comment below. But basically, people were saying that food prices have doubled, and I totally agree that food prices doubled, and they have gone up way more than even double since 2015, I would say as well. But you can see here that what they're saying is going right into that, and this person is saying the exact same thing, even though indirectly, that food prices have doubled. And then you've got Canadians tapping HELOC debt at the fastest rate since 2012. So credit cards, credit lines, and home equity lines of credit. This is what Canadians are tapping on as their lifeline right now, heading into the holiday season.
Trust me, this won't end well.
People haven't got the income. It's all debt-based growth. So next time you're at the mall and it's packed, just realize everybody's using their credit card. You won't see many people paying in cash, and you won't see many people using debit cards. That is for sure.
I just got a huge credit card bill.
Because a lot of people are just putting it on credit. And then Maple Blooded put this: if I was a pensioner, I would be very worried after listening to his speech in the UAE, talking about Mark Carney. Why is Mark Carney bragging about the CPP and QPP as if they are government assets? They're going to start directing those funds. So much for independence. Kiss your retirement goodbye. Take a listen to this.
The Minister of Finance will lead a delegation of Canada's pension funds. $2 trillion of capital, which almost begins to sound significant in the UAE. $2 trillion in capital, the Canadian pension funds. They will come here next year early to deepen existing partnerships and develop new investment opportunities together.
I mean, a lot of this is complete bullshit, but the fact that the government is even talking as if they direct those funds is somewhat alarming, because obviously if they did, you can just imagine the returns that they would be delivering. They would be like Mark Carney's returns on his generational investment, 5% over the next decade. Which is absolutely terrible. And you've got mortgages, which now account for 55% of the debt added in September, with the remaining 45% coming from consumer credit. We covered this already, but the reason I'm highlighting this is because you go back to why is the debt rising right now? It's actually because of the rise of use of credit cards, home equity lines of credit, and those things people are defaulting on more and more. The default rate is up 14% year over year, and that is definitely not something to just say, oh, it doesn't matter. And now I want to show you this as well, because when you compare the charts, it kind of shows something very interesting. This was during the financial crisis, total mortgage assets at banks in the United States, and you can basically see how it peaked out around 2008, 2009, and then it went straight down all the way to 2013, almost correlating exactly with the housing market recovery. You can actually tell with debt, which is very, very interesting. When you look at the growth, it's not exactly the same chart, but you can see here how the growth skyrocketed. You're at the highest levels, and now it's smacked right down to some of the lowest levels that we've seen in terms of debt growth. But when that debt starts to come down and those total mortgage assets, we don't have data like this for Canada, they start to come down, down, that is a really, really bad sign. And then you've got Mississauga mansion meltdown, proof that this is affecting everybody. You would expect people buying houses like this. I mean, this looks like a beautiful home, $800,000 loss. So this was bought for $5.55 million in 2023, and it just sold for $4.76 million in 2025. So just another staggering loss, a really, really huge home. And I was thinking the same here. Someone actually paid all the fives for some reason on this home, probably just maybe it was their lucky number, who knows.
I think I want my money back.
But it's really interesting, just more losses, even on the extremely high-end homes. And then you've got this, a condo renting for 4 years just sold $50,000 below its 2018 price. Owners eating 100 to 150K in losses is becoming normal now. Investors drowning in negative cash flow are quietly lining up for the exits. Rents falling, inventory swelling, carrying costs crushing, and yet we still pretend the bottom is near. Very interesting. We are nowhere near the bottom in the condo market, and basically showing that. And we've obviously talked about how prices in real terms are down at 2017 levels. So obviously if that's sold for a 2018 price in 2025, and that's the nominal price that it's sold for, then guess what? It's probably gone to 2015 prices even, because the amount of inflation that you've had since 2015 has been astronomical, especially in the real world, obviously. And then you've got this as well. A senior lady was completely scammed by a home equity bank and owes more than $400,000 and is being sued. But one thing I want to highlight in this article is not that story, although you can go there and read the whole thing. It will always be linked below along with everything else that we've been through in this. But it's this: reverse mortgages booming in Canada, driven by baby boomers wanting to supplement their income while staying in their home. Demand for reverse mortgages has surged. A reverse mortgage allows a borrower to receive money from their home's equity without having to sell the property. The principal is to be repaid when the homeowner sells the property, moves out, or dies. Home equity is at the front of the wave, riding it to an appearance on the list of Canada's top growing companies for 5 years. Just think about that. One of the top growing companies in Canada is a reverse mortgage finance company. That just shows Canada's economy in a nutshell.
Look at this thing. It's beautiful.
I mean, it's absolutely insane. So those banking on inheritance from their parents to save them, well, they're not going to be able to bank on that for much longer. And you've only got more and more people who are coming into retirement now who have fuck all in terms of pensions, and they're going to be relying on this sort of stuff even more.
No, God, please, no, no.
And you have to beg the question, nobody can afford these homes. You can just see the circular nature of the financing equation here and how it's not going to work in the future, and how there's going to be a lot of headwinds for the Canadian housing market, even in the future when it finally starts to recover. So nearly 180,000 purpose-built rentals in the construction pipeline, says Ben on X. Go home, developers, you're drunk. So you can basically see on this chart, rentals has absolutely skyrocketed since 2015. The amount of rentals, you'll own nothing and be happy. You remember that?
Yeah, let's say that.
That's certainly becoming the case in Canada. But with that being said, you've also got rents that are falling as well. So the mom and pop landlord is being completely screwed. And when you think about like Toronto, for example, rents are down 3.3% year over year. Vancouver rents are down 7.4% year over year. Calgary, 7.5% year over year. Edmonton down 3.8% year over year. You've only got Regina, Winnipeg, and Halifax. Halifax that's marginally up, basically flat, but really only Winnipeg and Regina that have rents growing. And the only one that maybe, if you believe the CPI, would be positive in real terms is Regina at 2.9%, meaning that pretty much everywhere in Canada, even places with rents rising, the rents rising are not offsetting the costs that are rising even faster. So people people who own these properties are losing, and some of them are starting to realize it and they want to get out, but everybody is trying to get out at the same time. I mean, it's just an absolute disaster, the housing market and how the economy revolves around it. I mean, I cannot believe a reverse mortgage company is one of the top companies that's growing in Canada, but it is 2025. Here we are. And then you've got this as well. Yes, Chrystia Freeland is leaving and going to the UK. It's absolutely hilarious how the people who orchestrated the Canadian Depression and said that they will have your backs forever.
I want you to know that we're here for you.
Are leaving the country. I mean, it's almost like it's orchestrated. I'm sure Justin Trudeau will be going to live in California with Katy Perry. Chrystia Freeland is moving to the UK, out of the line of fire. As it currently stands, she's an MP, a special envoy to Ukraine, and the CEO of the Rhodes Trust. The money laundering trifecta comes from Marty up north on X there. Absolutely crazy. He posts some great stuff. Costa Rica tourism crisis as 22,000 jobs are lost in downturn. So a number of jobs are going in Costa Rica. So obviously that is showing you what is going on with the tourism industry. And obviously it's not booming. It's not booming anymore. So you've heard all these narratives about how tourism is down in Mexico, how tourism is down in all these different places across the globe this year. And it's affecting jobs in these countries as well. But it's also a bread and butter economic indicator of what's going on in the global economy. Things like shipping volumes being way down, things like tourism volumes being way down. I mean, it just shows what's happening, and people are broke. They don't have the money anymore. And then the UK officially proposed temporary holding limits of £20,000 per crypto coin and £10 million for businesses. So you're going to see this more and more. And if the UK is doing it, Canada, I'm sure, will be doing it. You're going to see more and more restrictions on crypto. I think the idea of crypto and being outside the banking system is really, really good. But in reality, it has just turned into a financial bubble, another speculative mania and financial bubble. That doesn't mean the price is going to collapse tomorrow. It doesn't mean the price isn't going to hit $1 million. With bubbles, it's really hard to predict. But the actual idea of having money outside of the financial system, of being able to send money overseas at lower rates, circumventing the banks, was a good idea. But the problem is there's so much crime that is using it that countries are going to use that as an excuse to clamp down on it massively. And you're already seeing banks doing that. I mean, it's like the number one reason that accounts get frozen is people withdrawing crypto. So you really don't avoid anything unless you can actually pay for everything using crypto. And apart from a few countries, that just doesn't really exist, and the fees are very, very high right now for it as well. It's another thing to highlight. So the government once again is just stepping in with more red tape and regulation, and what happens in the UK will probably follow in other globalist countries like Canada.
Yeah, let's say that.
So anyway, guys, if you've enjoyed this video, I'd highly recommend you check out this video here. If you're looking for a VPN, want to help support the channel, then go to expressvpn.com/marketmania. That's the VPN that I've been using for over 6 years now. The best and fastest, and I will see you in the next one. Take care, guys. Bye-bye.